We are live. This is Travis from Carter Cal Capital, Trade with Travis, and Expert Advisor Reviews on YouTube. Hope everybody's doing very well on this morning. Let's go ahead and get through the disclaimer. I'm already late. I do apologize for that. Let's go ahead and go. I'm not a CTA, so I'm not going to tell you what to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. And understand that trading involves risk. It involves risk of being able to make money. It also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative for future results, which means that if you end up making money yesterday, it's not promised that you end up making money today. With that being said, as we go through and take a look at what's happening with the overall charts and everything else like that, I want to make sure that I end up saying hey to each and every one that is watching online. If you end up watching online a little bit later on, thanks for being able to pop in. My name is Travis. If you're unfamiliar with who I am, I've been trading for the last 6 years professionally, and um, what we end up doing every morning is going through and taking a look at some overall opportunities to be able to see if there's some tradable opportunities to be able to get in. Now, yesterday we ended up bringing up two trades, and we're going to end up going through those first. And then after that, we'll go through and take a look at the potential trades that we end up looking at, or see if there's any potential trades that are particularly out there. And then after that, obviously, if there's any other trading pairs that you would like to be able to talk about, we'll go through those as well. So yesterday, yesterday was a pretty big day. It was a pretty big move just overall. President Biden ended up speaking a little bit later on last night. We have consumer price index going on today. That's going to end up happening. I got to fix my clock on this one. Uh, let's see. But yeah, that's going to end up happening a little bit later on today. AM, PM. Still showing it as 24 hour. Okay, at 12:30, we're going to end up having consumer price index. Going into tomorrow, we're going to end up having retail sales. So as we go through and be able to take a look at what's happening online, I want to talk about the three trades that I ended up personally taking yesterday, and all of them kind of surrounded the last trade that we ended up talking about throughout the day, which was US 30. Remembering taking a look at US 30, we end up just to kind of give it a holistic standpoint. If this is your first time being able to watch, you take a look at this box that I have. I'm going to go to the full hour so everybody can be able to see it, even though I don't ever look at it from a 4 hour perspective. You see this large box right here. This was literally about 2 months worth of overall consolidation that ended up happening. About 50, I'm sorry, about, let me rephrase that, about 4 months of overall consolidation that ended up happening between this high volume node right over here. And we always talk about anytime that you're in a high volume node, you're going to end up looking at 33% styles of trading. And within that overall areas, obviously, you'll end up having a vortex area that you can be able to get into if you end up understanding how to be able to take advantage of it. Remember, high volume nodes bring in consolidation, and consolidation bring in large breakouts once the consolidation is over with. So you just have to be patient and allow the move to kind of be able to put itself in place. So our first trade that we ended up taking last week was when the market ended up breaking down. We ended up having a trade from 33,500 all the way to 33,300, and then obviously all the way down to the bottom of support of this, which was at 33,560. Once the market ended up breaking out, it ended up having a retest of the backside of this consolidation, and then ultimately ended up breaking out to the downside on Friday when it came down to non-farm payroll news and everything else that ended up happening on Friday once it ended up breaking down to that point. The last thing that we ended up talking about yesterday was that what's going on, CMG. The last thing that we ended up talking about yesterday was that this market was in consolidation, and we ended up saying, hey, there's an opportunity that if this market does break out of this consolidation at 31,800, that I'll be interested in being able to sell all the way down to 31,500. And that's exactly what ended up happening yesterday. Literally, right around that 9:30 time, that 10 o'clock time, the market ended up having a big drop when it came down to movement. Pushed back up like I thought it would. Got all the way back up, and it did not necessarily hit the full consolidation point. But once it ended up doing that, ended up breaking down, ended up bringing it down to the downside. If you end up placing your order in right at 31,800, you end up making 300 points of overall movement literally within 3 hours. And then after that, literally the market ended up popping back up and it went back inside of this consolidation. So the question is now, what should we do? Ultimately, what I'm going to end up saying is that I'm still going to consider 31,800 as the major consolidation support point at this particular point. But if you end up missing out on the move yesterday, quite frankly, there's really no trade to be able to take right now. Now, also, with that being said, it goes back to what we ended up saying ultimately before. This trade that we ended up taking a look at was really almost set up in November of last year, November 6th of last year, where the market could have ended up making that fall. But ultimately, since we've already done tapped this middle portion of this high volume node right here, the next portion is where's the market going to ultimately go to the downside, this overall, once you end up putting all of this information together. And essentially, we have one more extra spot where this market could potentially end up falling down to, um, based off of just looking at high volume nodes. The next area is looking at 30,800 for that next move. So that's what we're setting up for at this particular point. If you end up making money off of it yesterday, congratulations. If you did not, essentially what we're doing is we're waiting for a little bit of consolidation. We'll see what's happening with the overall news that's going to end up happening a little bit later on today with consumer price indexes, but I think retail sales probably might end up pushing it to the downside again. We're starting to see a lot more momentum, or a lot more one-sided momentum when it comes down to direction, which is making it easier to be able to get into trades and feel comfortable with that overall movement. It took us about 3.5 months to be able to get it, but it's finally here. So that's what happens when you're patient when it comes down to movements. Now, with that being said, let's take a look at Nas 100 since I'm right here and I'm already looking at these overall pairs. I did not take a trade on Nas, but um, Nas has been pretty much everywhere at this particular point. It's kind of out of whack when it comes down to movement. Um, yeah, I literally ended up saying that I wasn't interested in being able to make a move because I just didn't like how the chart actually looked. And I still don't like how the chart actually looks right now. Let's take a look at it from a daily perspective first. From a daily perspective, the market is in the buy zone overall. This final support, this final support right here at the bottom of this high volume node. But if you look at price, price is basically in the middle. Um, and there's a couple good things that are kind of going forward. It's resting just above the moving average, the long-term moving average. So that's one thing that found support. It looks like if we're being somewhat honest, and we're kind of saying, okay, well, this is what's happening with the structure of the movement. We do have somewhat of an ABCD pattern that's happening. We have this long-term movements. Let's go A, B, C. There's your D. Here's your new A, B. Technically, this is not a fractal low yet because we don't have a second day of overall movement to the right, but that would be your C, and then essentially that would be your D extension after you end up placing it in field. So um, we're still not there yet when it comes down to movement. But overall, if that does happen, essentially we've already done hit the 618, and it could be an expectation that the market could get all the way up to 13,940 from a long-term movement. The question is that truly going to happen? Is that truly going to happen? Is there a true plan of being able to see this market move to the upside at some point? Okay, so right now, still ain't doing anything with Nas, but Nas has been the most consistent pair that we've had all year, especially when it comes down to automation systems. But gonna end up kind of waiting on that one. Let's take a look at what's happened with Bitcoin yesterday. Anybody end up getting into Bitcoin yesterday? Anybody end up getting into Bitcoin yesterday? So let's talk about what we said. I personally did not take a trade on Bitcoin. Kind of wish I did, but um, going back to what I ended up saying with going back to what I ended up saying with the with US 30 and how the market was in a long term consolidation. This market has been in consolidation since the early portions of May. Um, in the inside of it, essentially what has happened is that it ended up pushing down to that 20,500 number that we end up explaining a little bit earlier once it said that it ended up rejecting. If you could take a look at this little line right here, it basically fell down to the support, to that previous support and the previous resistance of overall movement from previous consolidations, bounced from there, and then after that started to be able to rocket back off. Essentially, right now it's at resistance again at 25,000, or very close to 25,000. If the market breaks above 25,000, then it's going to go up to 29. Now, with everything that's been happening with the banks, it would not surprise me if any bad news when it comes down to the United States dollar, or any bad news when it comes down to banks in general, that the market may end up pushing past 25,000 and then rocket shipping up to 29. So if you did not take advantage of this movement when the market was down at 16, essentially, um, you missing a huge chance of being able to see this Joker end up basically 1xing when it comes down to moving. But if not, then obviously you can be a little bit more patient. Wait until 25,000 gets hit, and then after that, you feel comfortable with being able to jump in. That would be the clear number for us being able to do that. But um, right now, currently, it's at the top of resistance. We'll see how everything kind of plays off. Remember, typically when there's a breakout, there will typically end up being a retest. So here goes your breakout. The retest may end up happening back down here, and then after that, starting to push back up. Don't know that yet as a for certain, um, because obviously we got to see what's happening with news and how the market's going to end up reacting to today's movement. But there could be a good opportunity of overall movement in general. I'm going to go through oil. Oil very quick. Oil's been in consolidation. There's really no movement. I'm just going to highlight it again. We see that the market is done fell down to $72.83 per barrel. It's still inside of this consolidation, inside of consolidation. Remember, we're looking to be able to say if the market breaks below 70, then we're going to end up making an order to the downside. If the market breaks below, or the market breaks above 82.50, then we're looking at buying. Now, this is the second time that the market has tapped, and we're basically retesting this overall area. Anything below 72, anything below 72.50, maybe a viable area for us being able to consider about being able to sell, as long as the market closes below that when it comes for trading. But I still personally would not make a move on this one as of yet, solely because the market has been in consolidation for a very long time, and until it proves what direction it's going to end up making, then there's really nothing to be able to do. But we're clearly at support for the third time when it comes down to movement on this one. Um, you take a look at it. That was the first time right here. Here's the second time right there. We tapped it yesterday. We'll see how the market kind of reacts and moves going into today. Um, United States dollar index. So from Friday, we went from being able to say, okay, well, let's trade this thing to the upside, seeing this market push up to 13,000, to literally seeing the market free fall all the way down to 12,860, and kind of go from there. Did not take a sell trade off of this one. Market moved too fast, and going based off how the market kind of pushed back inside of this yellow consolidation area. It didn't make it a good trade to be able to consider. Like I said, the only trade that I ended up taking yesterday was the US 30 trade. I planned out this trade right here, but obviously I don't like what I ended up seeing off of that one. United States dollar index is still inside of, I'm going to call it being inside of consolidation, but that means that we have to adjust what the numbers are now at this particular point because of how it ended up rebounding. The new consolidation point, or new consolidation support is right there. Um, and now with more information, that makes it a little bit easier to be able to kind of decipher about where the market's actually, where the largest consolidation point actually is. So we got a bunch of jumbled price action right here, and now we can consider this to be an actual support. If it's by a whole number, it makes it a little bit easier as well. I'm gonna end up seeing what that number is. 12,864. So let's say 12,860. Not necessarily biggest number when it comes down to that. I've been fine. Um, like I ended up saying yesterday, this is the first video that I've done in about a few, probably about a week. Well, last week was the first video that I ended up doing about a week. Um, didn't didn't necessarily like, well, not even necessarily like anything. It was just that, um, you know how you end up getting burnt out sometimes. It was one of those type of deals. Had a lot of stuff going on. Had a lot of stuff going on with the family. Didn't take that many trades. Um, so resistance 12,990. Support now is at 12,860. Won't make any moves on the dollar until we end up seeing how the market kind of reacts off of that. Take a look at gold and natural gas. We're taking a look at gold right now, and we'll go from there. Um, so, okay, so just to review what ended up happening since the last time we ended up taking a look at this one. From a weekly perspective, and not my charts, so I got to get rid of some of these lines. Let's see. Get rid of this gold as well. Okay. All right. From a weekly, from an overall perspective, market was in consolidation from 1615 all the way up to 2074. 2074 was the last time. Was the literally the day or the second day after Russia invaded Ukraine. Um, Market ended up falling inside of this consolidation and finally ended up pushing back up to the middle and breaking a counter trend line break 3 weeks ago as the market was in the buy zone. So there's a good chance that the market is going to end up being overall bullish, which means that the United States dollar is going to end up being weak. That makes a lot of sense because we've seen that the United States dollar has been weak over the course of the last 6 to 7 weeks. Now we take a look at this from a daily perspective. We can see that the movement in the trade that we talked about last week, I believe on Friday, it was either Thursday or Friday, end up hitting and fulfilling that overall take profit number. We looked at it when the market ended up falling on the 2 hour all the way down to 1812, which meant that the D extension was going to end up being at 1867. I'm going to show that real quick so everybody can be able to see that. I know I'm talking numbers, but um, this was your A, here was your B. The market fell all the way down to the 86, which made that the 118, which is the extension. Now, if you understand, this is a simple rule that we end up talking about when it comes down to breakouts. Anytime that you end up having a breakout, you typically end up having a retest. This made a lot of sense on why this market was going to end up retesting this purple consolidation that we end up having um, from previous trades before, which matched up with the overall top of this movement. And if we take a look at the weekly, we talked about the weekly going all the way up to 2053 to the upside. So essentially, we are in the C phase of seeing this market start to go up. And we talked about typically when you end up trading anything, from a Fibonacci perspective, the best trade to be able to take is the movement from the C to D phase. So especially after the market ends up breaking the overall B, which is which in this case will be right here. Um, so I'm going to stick to looking at being able to buy um, on gold and being able to find opportunities of buying on gold. Now, the question is, do we have one right now? Obviously, if we take a look at it, that answer is no at this particular point. It broke a fib already. On this last movement, the market ended up breaking an A and then popping all the way back down here. So we have to take a look at new fibs to be able to trade this, which will end up being, come on, what my fibs at? There we go. Which will end up being that move right there. So Currently, right now, the market done went through three different waves on the 2 hour of the extensions. We see the market retracing right now. We'll at least expect that the market will go to 1891, which is a 382. But we can see the market fall all the way down to 1877 and still be considered to be very much healthy. So right now, we're just looking at the. I would like to be able to see that the United States dollar ends up gaining a little bit of strength right now, and then after that, starting to fall a little bit. Once that starts to happen, then after that, look for a counter trend line break to be able to get back in on this movement. Currently, right now, am I interested in being able to jump in off of this movement right now? The answer is no. I will wait for the market to be able to retrace a little bit. Then after that, look at being able to jump in once the market retraces. So if that makes sense to everybody, essentially what I'm looking for is the market's already done completed the extension. Let's see if it falls. Once it ends up falling, by giving it a little bit of time, we'll see a counter trend line break and see it pop back up to the upside. Once that happens, then I'll be interested in being able to jump in off of that movement. Type in a Y, yes, if that makes sense. For being able to get in off of this pair. Still waiting on this one. You got in yesterday. Congratulations. There was a lot of good movement yesterday. Okay. Natural gas. So we'll end off on that one. Um, haven't looked at natural gas and well, I haven't looked at natural gas since we were really rolling. Um, off of this one. Yep. Yeah, it's been a while. Okay, so clearly we can see that the market is bearish. I think everybody kind of agrees that the market is bearish off of this movement. We go based off of the daily. We can see that the market ended up having a outer trend line and a inner trend line, or I'm sorry, inner trend line and a outer trend line that end up getting broken to the downside. Once this market ended up breaking to the downside, it fell all the way down to this major support line or major support level at $2 and 2.8 when it came down to that overall movement. The question is, um, what's the direction now? Because the market has been the way that it's been. Weekly would tell you that it's in a buy zone, clearly. Uh, and we've had, at this point, at least 11 weeks of overall downside movement. But there's no kind of trend line break to speak for us being to be able to see upside movement at this particular point. So the market is still considered to be bearish. Now, simple question on this one is: just because it's bearish, does that mean that we need to trade this right now? That will be the ultimate question at this particular point. So the only way that we can be able to find that out is by being able to take a look at the phases and see if there's see if there's any more room to the downside. Um, let's go with Fibs, ABCD. When you're saying confusing, what do you mean? What? Ask your question. Let's see if I can be able to. Let's see if I can kind of be able to make it a little bit easier to be able to understand. Market ended up popping up to the 618. The extension just got hit. Okay, perfect. All right. Okay. Sorry about that. Shouldn't have did that. Let's see. All right, so let's clear it up a little bit. This is what happened. Um, Early in August of last year, market ended up pushing up to a high of basically $10. I'm gonna say $10 when it comes down to this spot price. From there, the market ended up starting to reject, and we ended up seeing that the market really started to reject when it came down to prices of natural gas. Um, Now, from here, We take a look at it from a daily perspective. We end up going through this downside field. So we're just looking at selling the whole time at this particular point. The market has went through two different daily phases of Fibonacci's. The first phase end up finishing off in early October, where the market ended up going down to 6.39 or 6.38. From there, it ended up going through the second phase of Fibs, in which I'm getting ready to this highlight right here. And after they end up breaking that 6.59, that first phase of Fibs, they end up retracing all the way up to 7.06, which is this green line right here, or the 618, which is a very sweet spot for people to love, people that love being able to trade retracements. We end up going from there. Now, once the market ends up basically retracing to a green area, then it will extend down to a green area. That extension was at 2.34 or 2.35. That literally got hit about 6 days ago, 6 or 7 days ago at this particular point. So the question is this the bottom or not? I don't know if it's the bottom. We never know if it's going to end up being the bottom. But what I can say is this. We are at a price range that historically has been a support level. And because historically it's done been a support level, and it's done been an area where we see a large group of pricing and a large group of action, it would not surprise me that this market will start to consolidate. And if this market starts to consolidate, then that means that could show signs of a U-turn happening in the near future. So if I'm looking at anything moving forward with natural gas, it would be, are we going to end up seeing consolidation? Can we see that market price starts to be able to stay inside of an overall range from here, whether that's the highs, that's the lows, and then after that, once we have that consolidation, then now we can be able to place our orders in. The simple way of being able to look at this would be, okay, if you take a look at this histogram chart that you can see on the right hand side, which is volume profile, as soon as it ends up breaking 2.7, let's say 2.75, then to me there's three different trades that you can be able to take advantage of. I'm just going to arrow them. The first trade will be from 275 to 322. The second trade will end up being from that 275 all the way up to $5.30, depending on how patient you are. And then after that, you have a sub trade that you can be able to take right around 3.9 up to that $5 mark when it comes down to movement. So no, I don't think that we're at the bottom yet. I think that we're at a point where this market could start to consolidate, and we look at historically, we see that price has kind of stayed within that overall range. That's the only thing that I'm looking for. If we can see this thing start to consolidate, then we can build a game plan off of it. But that requires patience. I don't think that's going to happen today. At no stretch of the imagination. I think it will happen at some point, but right now it's probably not going to be today when it comes down to movement. Hopefully that made sense. But I'm going to end it off right there. If you like what I ended up doing, please click on that boost button. We're getting close to being over at 1,000 followers on TradingView. Been a while since I really kind of pushed that number, but I think that we're getting close when it comes down to that. So super excited for everyone when it comes down to that. Testament to each and every one of y'all. And like always, make sure that you end up planning your trade your plan. I'll see each and every one of y'all in the next video. See y'all tomorrow. Everybody, take it easy.